What is up, you guys? Pete DiCarlo here, and today we're going to talk about AMC once again. I don't like to do video topics back to back normally, but I did post a video talking about AMC yesterday when we hit highs of about $72. If you did not see that, I highly recommend that you go back and take a look at it because number one, not only do I go over AMC, but I actually go over things like BlackBerry, Tilray, GameStop, and kind of explain exactly what a short squeeze is and why a short squeeze occurs. Now, that's extremely important, but in the video, I said something that a lot of people probably didn't realize was important, but I talked about AMC issuing more and more shares until they eventually diluted enough people out for the short squeeze. Now, number one, that makes a lot of sense because it's going to hurt people who are hoping that this thing can continue to squeeze, and it's going to allow big money to actually get out of their positions and not have to pay an insane price. Number two, it's going to scare people from holding the stock because you see the stock drop 20, 30, 40% in a single day. You're a lot less likely to hold on to that in the fear that the stock's going to go back down to like $6-7. Now on top of that too, it actually raises money for the company because as of right now, AMC is not going to be profitable until the end of 2023. However, they could be more profitable and become profitable quicker by doing share buybacks and share offerings. So we're going to talk about that. But before that, go and check out the link down below. Use the code HONOR to join our private academy for only for $25 a month, 75% off for your life. So if you're a first responder, if you're a policeman or woman, firewoman, fireman, like any frontline worker, you can use this code and start for 75% off. If not, you can use the code Academy90 and start for $10 your first month. You get access to every single trade that I take live as soon as I take it. You get to live stream with me and my team every single morning for the first hour of market open. You get to get access to our private Discord as well as our 60-hour course library. So go and check that out down below. Now, let's talk about this share offering, and then we're going to talk about the price of AMC. So like I said before, go back, check out that video that I made yesterday because it's extremely important. It was one of the dirty-ish things that I said that they were going to probably end up doing. You can see that we're going to go over this right now. It's a pretty decent link. Pretty decent article speaking about why AMC is down about 30-40% today. But essentially, they just offered more shares. So AMC shares were down by a third on Tuesday after the company took advantage of a record stock price. When it issued shares. So to give you guys an understanding, on Tuesday, so now it's Thursday the 3rd, on Tuesday, AMC did offer about, I believe, 10 million shares. Then again today, they offered another 11 million shares. So it's right around like 21 million shares were offered into the public market. Now, in retrospect, that's not a lot. Because if you look at something like AMC right now, I believe the volume today alone is like 120 million. I actually don't know how to check using TradingView because I'm kind of new to the platform. But if we were to just go and take a look on my phone, trading volume is 335 million shares right now. So, 11 million is a little drop in the bucket. It's not a ton, but to me, it's more of a scare tactic. It's not like, offering 11 million today, 10 million on Tuesday is enough to really dilute a lot of shareholders, but it is enough to scare people to think that they're going to continue to go ahead and sell some more shares to the public. Now, if you watch the video, like I said before yesterday, you'll know that a short squeeze can only occur to this magnitude when there is more shares shorted than there are in existence, as well if nobody is selling their shares to the people who are forced to cover. Because if nobody's selling their shares, that's why you hear holding the line, as cringy as that can be, if no one's selling their shares, then the people who are trying to cover their short positions have to continue to bid the stock up, and up. So that's exactly what happened. And so theoretically, AMC could just continue to offer more and more shares, which means that they end up getting less and less control of the company. Let's do this for a quick little experiment. And obviously 100 million shares, they have much more than 100 million shares. But let's say the company as a whole is only 100 million shares. What you have to realize is that, obviously a company is not going to have more than 50% of its shares out on the public market. So let's say that AMC has 100 million shares total, and they decide that they want to let 20% of their shares go out on the public market. And this is all in theory. So the company goes public. they offer 200 million shares out on the public market. Well, let's say that there's 200 million shares out on the public market and there is 300 shares that are shorted, which means that there's 150% of the stock is shorted, which is what we spoke about in the video yesterday, where there's more shares shorted and borrowed against than there are shares in existence. Well, in that predicament, with 200 million shares out on the market, that means 20% of the entire company is public, 80% is private. What the company could do if the stock went from $4 up to $70 is they could say, okay, well, number one, to help out Wall Street, and number two, because we need money. We're a company that's really not doing well fundamentally. What we're going to do is offer another 10 million shares out on the public market. 10 million shares out on the public market. So now we have 30% of the company now public, and instead of having a 150% short interest, we now have 100% short interest, and they sold those shares up at $70. Now, let's say that the stock goes up to 90. The company decides again that they want to offer another 10% of the private equity out into the public market. So they offer another 10% out to the public market. And now it gets bought up. Short interest goes from like 150%, which is what it was before they started offering shares, all the way down to like 85%. And with short interest at 85%, it could scare off a lot of people who are holding their positions for short squeezes. It could cause the stock to take a pretty significant fade like we saw today. And then they can essentially continue to dilute until they're 50-50, or really want to be like 55-45 or 60-40. And what happens is, let's say the stock goes from $72 all the way back down to $4, because you're probably thinking to yourself, well, why would they want to continue to offer shares? They're losing more and more, first of all, more and more equity in the company, and they're also losing power. Guess what? If the stock goes from 72 back down to $8 or $4 even, they can just buy those shares right back. So very quickly, let's just say that, they offered today, we'll say 11 million. So you do 11 million shares. So they offered 11 million to the public market times, let's say it was offered at $68 a share, like right around, let's say today at $60 a share. It'll be easy. So 11 million times $60 gives you $660 million that they ended up selling those shares for. Now they get that money. So that they get the $660 million and they give up 100 million shares. So let's say that the stock craters, and let's just say it doesn't even go back down to $4. But no, let's say over the next year, unfortunately, AMC goes all the way back down to $8. Well, what they can do is buy back those shares at $8. So 100 million shares times 8 means that they would pay 100 million times 8. So what they would end up being able to do is making the profit between the two of those. So 60 minus 8 means that they would make $52 profit per share. Do 52 times 10 million, they would make $520 million, because they can buy back all those shares at a much cheaper price that they ended up putting them on the public market for. And so one of my fears from a short squeeze standpoint is that AMC continues to put more and more shares out on the market. And even if it doesn't end up diluting, like I said, they only put 10 million out today. Even if it doesn't end up diluting, what's going to end up happening is it's going to scare the living crap out of people, and they're going to end up getting out. Like if you look at AMC from where we closed yesterday to lows today, the stock was down 41%. If you look at from highs yesterday at $73 all the way down to $38.50, it's down 50%. If you look too, we actually did get a pretty significant bounce here all the way back up to 58 and then hit a lower low of 38, and now we're moving back up. So this video is not made to tell you like, I think AMC is going to continue to push up to $100 or it's going to pull all the way back down to 28. Essentially for me, I would be careful, weary, and be watching to see if they continue to issue more shares and how this thing, ends up moving in the future. If I were to be taking any positions on AMC right now, what I'd be doing is actually selling puts. So I'm going to go over to TD Ameritrade. If we take a look at like June 11th, which is next Friday, you could sell a $20 put which means as long as the stock closes above $20 by next week, you would make $117. So about 2.5% returns. And the stock would have to crater an extra 56% for you to be forced to purchase those shares. So that's what I'd really be watching for, and that's what I'll be checking out. But I wanted to make this video, just drop by real quick to kind of go over the worst case scenario, which is what we talked about yesterday. Doesn't mean that the squeeze is off. Remember, it's just a little drop in the bucket. But I have no position in any of this. So take it with a grain of salt. Thank you guys for all the support. Hit the like button, subscribe, and make sure you go check out our private academy. And I'll see you guys next time. Peace.